how did it spawn an 11% decline in China sales?
Yeah, so whenever Apple has a shortfall these days, of course, there were days where they didn't have these shortfalls. They have some color or, I guess, an excuse as to why that happened. And for China this time around, we're talking a $7 billion decline from a few years ago in the holiday quarter. They're saying that they simply didn't have enough inventory. They're saying that they underprojected how many units they needed in the channel for the quarter. And by the end of the quarter, by the end of December, they simply ran out, which meant they weren't able to fulfill those orders, which led to a decrease in revenue. And he says about half of the 11% shortfall was due to that. Fine, makes sense, right? But clearly they were anticipating a shortfall to begin with if they underprovided inventory. And I think the response, right, this morning, you see the stock price is up considerably despite the significant miss in China, right, and the 3% decline in iPhone revenue. I think one is the guidance, right? They're going to grow again in the March quarter, which is a far cry from where they were just a year and a half ago, where there was a series of quarters in a row where they were declining. So that's positive. But I also think investors believe that because they missed those sales in China due to inventory in Q1, those sales will return in Q2. If you're an Apple customer and you want the new iPhone or iPad or watch or what have you, and the Apple Store doesn't have it and it's unavailable, you're not really going to give up in most cases, right? You're going to go back when it's in stock. And so I think investors and analysts believe that is going to happen, and we are going to see that China revenue actually come in and factor into the March quarter.
Mark, how much of a grace period are investors, though, willing to give Apple, given some of the struggles that we've seen with Apple Intelligence and also areas like wearables, too?
Yeah, no, both good points. So on Apple Intelligence, I think investors are giving Apple a little bit of leeway. They've shown their ability to come into new categories slowly and improve the product over time. Obviously, AI is a different beast. Obviously, they have rivals both here and abroad that are absolutely crushing them right now. But I think investors are going to give them a little bit of leeway. I would give them 2 more quarters, right? Analysts, I believe, will give them 2 more quarters before they start having real concerns about this technology and its ability to drive sales. And from a fundamental perspective, how it works feature-wise. In terms of wearables, the new CFO, Kevin Parekh, made an interesting point on the earnings call that there was a little bit of a tough compare. So typically, over the last few years or so, you've seen Apple roll out 2 or 3 new Apple Watch models. This past fall in September, they only released an Apple Watch Series 10. There was no new Apple Watch Ultra. That's coming later in the year. This year, there'll be a new Apple Watch SE later in the year this year. So you will see a little bit of that momentum return to the wearables category. But clearly, the Apple Vision Pro not driving anything material to grow that category, right? I mean, if you look at the big picture, Apple's first major new product category in years, $3,500 in revenue per piece at minimum, and it's not driving anything to that segment. That just tells you how few of these devices they're still selling.